Hello, everybody, and welcome to the NextGen Planners podcast. My name is Dan, and I'm the head of community experience here at NextGen Planners. Today, I am very, very happy to be joined by Ruth Handcock from Octopus Investments. How are you doing today, Ruth?
I'm very well. How are you?
I'm fine, thank you. I'm all good. This is the first podcast that we're recording of 2023. So we've started the year well, haven't we? We certainly have. How was your new year?
It was lovely. I had a house full, so I kind of came back to work for a rest. So I'm not hosting anymore, which is a dream.
Good stuff. Well, I've actually just remembered as well that even though we're recording this in January, it probably won't be released until March. So we'll just be bringing back all sorts.
Talking about.
Yeah, all sorts of cobwebs. So just so the audience know, we are recording this on 11th of January. So yeah, that's why we're talking about the new year. So for anyone who doesn't know, Ruth, she is the CEO of Octopus Investments, and I would imagine that probably a lot of you in the audience will already know who Ruth is. And what those guys at Octopus get up to. But we're very excited, of course, to have her on the podcast today. So as we do with everyone, Ruth, to kick things off, can you just tell us a little bit about what you get up to on a daily basis?
Of course. So my day job's running Octopus Investments, which for anyone that doesn't know, we're a private market asset manager. So we've got 12 billion under management. And we get excited about investing in the people, ideas and industries that we think are going to change the world. That's what gets us all out of bed in the morning. And it's really exciting doing that in private markets, actually, because you can get so much closer to the companies that you're investing in and the ideas that you're investing in than you can through listed structures. So we feel like we can bring that to life. However, the brilliant thing about the Octopus Group is that we're pretty restless. So it's rare that we do one thing at once. So my other day jobs are setting up what I think of as an ecosystem of companies around Octopus Investments that help people get more from their money. So in Octopus Investments, we do that through brilliant products. In some other companies, we do it in different ways. So we've got 3 companies that we brought into the group. The first is one called Seckle, which is an investment tech business that helps people invest better and helps advisors set up their own platforms. We've got Octopus Money Coach, which provides financial coaching to employees in the workplace. And then very recently, hot off the press, we've got a business called Guardian Angel that helps people plan for and manage bereavement. So I spend a bunch of my time helping those companies too.
It's great stuff. When you said there about, you're investing in companies that are changing the world or will change the world or are even just doing things to innovate, you're certainly right there, because those 3 companies, like you said, are doing things that are desperately needed. Certainly are. And it's not that, like you said, I mean, it's the whole Octopus Group. I mean, I don't know if I can say this, I will anyways, but I am actually an Octopus customer in a part of your other in somewhere else in the group.
Good for you. You can always say that. Say it as often as possible.
But the customer service is, you can tell that customer service is, the top priority there, and you get dealt with like a human rather than a number. And that's something that I feel across the culture of everything that you guys do. It's not just one part, it's pretty much everything. It is that people are people. They're not numbers. They're not, sales. They're not targets. They are human beings who need help.
So. That's exactly it. And customers are king. If you're not solving a customer problem, we're not really interested. So that absolutely runs through the DNA of every company in the group.
Yeah, and you can feel that. You really can. So, I mean, I'd love to talk about all those kind of different things that you've done. But I mean, we'll crack on, and we'll probably cover some of them at different points in the podcast anyways. But one of them is that you mentioned there was Seckle. And of course, one of the biggest talking points in financial planning, I mean, in the world, but certainly in financial planning at the moment, is technology and the tools that we need in our profession in order to modernize it. And we're doing, I would say we're getting there. It certainly is better than how it was, let's just say 10 years ago. We're still not perfect yet, because we're still relying on a lot of the kind of legacy tools and technology that we've been using for years. So I'm interested. No one's interested in my perspective on this. We're interested in yours, of course. So how do you think we are actually doing in this area of technology? And also, where do you think that we need to go, and where do you think that we need to end up?
Yeah, it's a great place to start. So before I joined Octopus, I spent 4 years setting up a challenger bank. So I spent 4 years kind of immersed in fintech and retail banking. And I think when I moved over to kind of wealth management and financial planning, the thing that struck me is I think we're about 10 years behind where banking is. Now, that's kind of no surprise. There's a lot more money in banking. There's a lot more big scale incumbents. There's a lot more innovation. But for me, I always look back to that as somewhere that we can go. And I think across our industry, actually, we have problems around technology from a customer perspective. So I think customers often find it harder to interact with wealth management and financial advisory firms they do in other sectors, because technology is legacy and doesn't talk to each other. But we also have a massive efficiency and scalability problem. And the thing I hear most frequently from smaller planning firms is, I really want to scale, but I don't really know how to build scalable ops and technology. And there are fewer things that you can take off the shelf that talk to each other to do that for you. So I do think we're a little bit behind the curve. So the bit I really focus on is less what are the actual gaps you've got to fill, but more how do you create an environment where innovation can happen. So I'm a massive believer in the power of startups to solve difficult customer problems. And I think we're seeing more investment into the sector than we have in the past, and some brilliant startups scaling. But then really startups have to have somewhere to go. So I think the bigger players in the industry need to figure out, which is what retail banks have had to do, how you can work with startups and how you can potentially acquire them in a way that doesn't kill them. It's the toughest thing about amplifying innovation, because if you can get that whole life cycle working, then suddenly you've got hundreds of people thinking about how to solve customer problems, rather than what we've got at the moment, which is, I would say, the kind of the early thinkers. We need a lot more people if we're going to really transform tech in our industry. So creating that ecosystem is one of the things I get a bit obsessed with.
Yeah. It is true. I think it's almost a bit like a kind of silo approach at the moment. It's like, everyone wants to be the first. This might be true, might not be true, but it feels like everyone wants to be the first to solve that issue.
Yeah.
And if you think about it from a different angle of, okay, well, what actually, if we all work together to solve that issue, where could we get to? And I think that's kind of coming across in your thing there. You've got hundreds of people working on it instead of, tens of people working on it in different groups, all targeted at different angles.
Yes, exactly. It's one of the reasons that I fell in love with Seckle, because what Seckle's trying to do is power innovation, whether that's in financial planning firms, whether it's in fintechs, because it allows you to spin up your own model on top of a platform that does all the complicated bits for you. So it can have that catalyst effect that allows people to get to market quickly at a cost that, doesn't mean you're digging too much of a hole and building something. And more models like that, I think, are needed, which you do see over in retail banking and in payments, and you see fewer of them over our side of the fence.
Yeah, I could talk forever on the kind of banking, financial planning kind of analogy. I'm interested as well. We'll cover this kind of in the next question I'm going to ask you, but like the reason why there is such a difference and why financial planning is 10 years behind. Like, is it because perhaps one of the answers could perhaps be that financial planning is kind of more personalized than banking is, whereas everyone in the UK, pretty much almost everyone, has a bank account or a bank that they bank with, whereas I think what's the figures at the moment, it's like only the top 10% of people are.
Yeah, exactly.
I say top 10% as well, by the way. I mean top 10% in terms of wealth, not top 10% of people have a financial planner. So there's a massive gap there, which could be one of the reasons why. So maybe we'll ask that question as well, but also if you could imagine the kind of what that good technology for consumers of financial planning would look like what does it look like in banking that we could replicate in financial planning that would make it successful? Like what do you think that would look like in terms of successful technology?
Yeah, it's a great question, because there are some similarities and there are some differences. So as you say, retail banking is higher volume, is higher penetration, so the market size is bigger. So certainly the VCs have probably looked at it and gone, well, if I get in here, I've got 100% of addressable customers. The other big difference, which is I think what really drives it, is that I think apathy is pretty strong across financial services in consumer behavior. So taking action is something that customers often fail to do. So you say to someone, do you like your retail bank? Certainly when I started Tandem, which is the bank I helped set up, and there weren't really any challenges, most people said no. And then you said, have you changed your bank in the last 15 years? And they also said no. Like, I think you're more likely to change your spouse than you are to change your bank, which is pretty mad. But that said, the advantage that retail banking has is every day you're probably using a product. So every time you make a payment, you're using a product. So the opportunity for engagement is quite high. I think the big challenge in financial planning is that you can always put off your plan till tomorrow. There's no day-to-day trigger that means I've got to engage with this. And it's why pretty much all of the successful commercial models put a person at the front of that, because you need a person to break the apathy of taking action. So I think, where does that lead you in terms of what are the kind of customer needs that you can meet? There's definitely one around kind of personalization and relevance. So I think we've moved past the stage where people want to consume lots of content. I think people want really personalized content, and that's what people have got used to. So I think that's one trend. I think you've got to be engaging. So I think there's something around visualization and understanding that that is really important from a consumer perspective, because again, if you can visualize what impact a change in behavior has, I think someone's way more likely to take action than either just through a conversation or just through looking at a spreadsheet, which many people really struggle to engage with. And then the third bit that I think we've got to achieve, both from a customer perspective and for efficiency, is kind of low admin. So we're an industry still riddled with paper forms and systems that don't talk to each other. So I think a principle whereby customers should only ever have to give you a bit of information once is going to be key to people engaging, because otherwise they just get to the point where you ask them for their national insurance number for the 15th time and they're just like, I'm done. I can't be bothered anymore. Those are the three kind of: visualization, personalization, and efficiency, getting rid of admin for people.
Yeah, that is, because that's why I asked for consumers rather than for financial planners, because financial planners are probably going to more focus on the efficiency side of it, which is fine. Anyway, it's great, we all want that, but we've never really asked the question of what do consumers actually want. And I'm really interested actually in your thing about engagement, because that's something I'm seeing a huge amount of people working on at the moment, is involving people in their financial plans. So, like you mentioned, the analogy kind of works with the bank as well. People are involved in their bank accounts because they use them every day, and they probably log into the app every single day. Some people do anyways.
Yeah.
Whereas the majority of people who have financial planners will see them once a year, maybe twice a year, maybe sometimes even more, but they're not using it on a day-to-day basis. Whereas if you can really engage clients with technology to involve themselves in their financial plan, maybe not every day, but certainly more often, I think that's probably something that we could be striving for as well, is to involve people.
I think it could. And I think there's a really difficult conundrum in our industry, which is, you're right, you don't want people to look at it every day. I mean, if you look at a fund share price every day, you go mad and you probably take the wrong decisions. So how do you make a customer feel kind of wanted and engaged and interested, while knowing that telling them something every day is probably going to lead them down a path of behavior that's not the right answer for long-term planning? I wish I knew the answer to that. I don't. No. But it's one of the core conundrums, I think.
Yeah, it is. And it doesn't even need to be check your investments every day. It could even just be something as simple as a little tip or something every day to remind people that their financial plan is there.
Yeah.
I'm seeing lots of people using this kind of stuff at the moment, and it looks really, really good, because we are nowadays, it's actually called the IKEA effect. When you're involved in building something, it's a behavioral bias. When you're involved in building something, you care about it more than you would if you just bought it off the shelf. So if we could apply that to financial plans and people actually build them themselves, they're going to care more about the financial plans, and they're going to be more kind of accountable. And it's something that I'm seeing and I'm very, very excited about. So yeah, great advice. Do you feel like we've done technology? Or is there anything else that we think we can add? There's lots that we're going to be flying around with today. So the next one is another huge topic at the moment, which is something that a lot of people in NextGen talk about quite often. which is sustainable investing or ESG or green investing, whatever kind of umbrella term we want to use for it, basically means investing for good. So the big question for you to start off with is how optimistic about it are you about, the area of sustainable investing in financial planning at the moment, and actually in financial services as well?
Yeah, I mean, I'm massively optimistic. I've heard some people say recently, and I think there's a truth in this, that when market conditions get tougher, people retrench away from thinking, how do I do good, to how do I protect my investment? And, I'm sure planners and wealth managers have seen a bit of that, but it's all in cycles. And I don't think it changes the long-term trend. I think the long-term trend is people will and should get more and more interested in the outcomes that their money produces that aren't financial. So whether that's, sustainable investing suggests to some people that you're investing in, climate or sustainability. For some people, absolutely, that might be exactly what they want their money to achieve, and it's kind of hard to argue against it. Yeah. But actually, I think it's caring about the outcomes, whatever those are. And I think some of the really interesting models, and you see more of these in the US than you do in the UK, are kind of mass customization models, where you say, there's one called Open Invest, that I think was recently acquired by one of the big investment banks. There's one called Just Invest as well, where you can mass customize a portfolio of equities and say, it's not just that I want sort of generic sustainable, this is the difference I want to make in the world. And then you obviously then get a load of data back on this is the difference you are making. So that outcome driven investment, I just can't see a world in which that trend doesn't get bigger and bigger and bigger. But I think the layer we will see that it's really hard to achieve at the moment, particularly with trading costs in the UK, completely different from trading costs in the US, which is what those mass customization models rely on. I think we will start to see a bit more expectation of personalization in what those outcomes are. But step number one is get people interested. I think if we can achieve that for now, that's pretty massive.
Yeah, absolutely. You've actually just brought me onto a question that I was going to ask later, but I think we'll probably cover it now. I've asked a few people this question. I personally can't see how it won't be, but that's my opinion. And again, no one cares about my opinion. They're here for yours. So when we think about the future, when we think about, I don't know, maybe 30, 50 years, whatever it is in the future, if we can think that long, do you think that like sustainable investing or whatever we want to call it, green investing, do you think that will be the default type of investing in the future? Or I guess I'm just trying to see the end of where we get to with this, because the conversation's been going on for a while now. Where are we getting to and where are we going?
Yeah, I mean, if you take the argument that, a sustainable company is way more likely to be here in 30 years than a non-sustainable one by its very nature, then there's a perfect correlation between financial return and sustainable investing. So, if you extract it right to that level, then of course it should be now. The complication comes in how complex this market is. So, one of the really obvious examples people always use is the oil majors. Should you invest in an oil major? Big dividends, but great long-term growth prospects, probably. And, probably investing as much in renewables as many standalone renewable companies are. Are you a goodie or a baddie if you invest in an oil company? It's really easy to say baddie, but putting £1 in an oil company, you're probably putting 50p of it into renewables. And you are taking something that has the balance sheet to change and say, I'm backing you because I want you to change. So it's that next level of complication that means, to me, it's not as simple as kind of will all investing be sustainable. It's how do customers interpret what they're trying to achieve and actually manage some of that complexity and try and understand the outcomes they're creating from the pound they're investing. There's some super cool models as well of taking your pound and not only using it for sort of funding a stock, but using your influence to change the way that company acts. There's a startup called Tomello that does exactly this. I think models like that are fascinating as well, which almost takes you beyond sustainable to influence being the big thing. Is I expect if I'm giving you my money that you'll also listen to me as an investor. And I think that could be the next level as well, a bigger expectation of that.
Yeah, absolutely. There's a few things to. Firstly, we've had Florrie from Tumelo on our podcast
Have
before,
you?
and
Oh,
yeah,
good.
I agree. Amazing. They're doing amazing work, and it's working towards what you talked about in the previous. What you were talking about was engaging people in this. So there's a big argument, isn't there, whether it's more impactful to de-invest or to engage with your
Exactly.
investors, and whether to try and change things or whether to just speak with your feet and just take your money out and go somewhere else. I know it's not as simple as literally taking your money out and going somewhere else, but you know what I mean.
Yeah.
And it's a huge argument, and they are doing great things as well. I think as well, when we have this conversation, I think we're all often always drawn into the area of fossil fuels, energy, that kind of area, and climate change. Whereas I think we sometimes forget, don't we, that it's not just about the environment, this stuff. There's two other letters in ESG, which is, you know, governance as well. If the end one is the one we always forget about.
Yeah.
So it's not just about the environment, it's all sorts of different things, like impact investing, for instance. Some of the things that those guys are doing, some of it doesn't have anything to do with the environment. Some of it has to do with black owned banks and all different areas around the world where they're trying to invest in people as well. So I think maybe if we open up that conversation a little bit, because it can become a bit, I think you probably agree, it can become a bit repetitive and dull to talk about the environment all the time, whereas we can talk about other things that are going on in that area as well.
Yeah, I agree. I mean, we have a set of products that we call the future generations products that have three themes, exactly as you say. So one of them is climate, but the other two are revitalizing healthcare and empowering people. Because people care about those as well, as you say. And there are some phenomenal models of startup and growing companies that are solving massive problems. And, you know, those companies may also feel a responsibility to be responsible when it comes to climate, but that's not what gets them out of bed in the morning. What gets them out of bed in the morning is solving a healthcare problem or increasing diversity or a huge swathe of other things. And, you know, we as clients and consumers and individuals will feel drawn to different themes, and that's okay. Again, I kind of hate the use of kind of good and bad in this scenario. It's way too complicated for that. But I kind of, to reiterate, I think the main win is get people to care about the impact their money's having. This isn't just about financial returns, it's about what impact your money's having. If people start to care about that, then I think that opens up loads of possibilities.
Yeah, definitely. And that actually brings me nicely onto what I also wanted to talk about, which is how we do that. So I've said this on a previous, but I think it was actually when I was talking with Florrie from Tumelo, which was, you know, people have a limited knowledge of investing anyways. Of the kind of, shall we say, traditional investing, which is not focused on sustainability, which is just kind of bog standard default investing. You know, to then add a different layer of complexity, which is, oh, by the way, you can also invest your money to do good as well. I mean, if I was the average layperson, well, I am an average layperson in terms of many things, but when it comes to investing, and I heard that, I'd be like, oh, not another one. You know what I mean? I've already got so much to think about. I don't even know what a fund is. How do you expect me to understand that I can also invest my money to do good as well? So I guess I'm just interested as well in what your perspectives are on that. Like, how do we actually get people interested in this area of investing as opposed to just normal investing?
No, I agree. It's incredibly complex. You kind of end up with this 3D model of kind of risk return, and then you've got this third dimension, which kind of blows people's minds. I mean, firstly, I'd say it is, I think, a huge opportunity for the financial planning industry, because we can act as interpreters, and we should act as interpreters. And if we've managed it with risk and return, we've got to back ourselves to do it with a third dimension. So that's the first thing I'd say. The second thing that I think is underused at the moment is, because we work in a financial industry, we assume what people want is data. I'm not convinced what people want is data. I think what people want is stories. And I think stories and content is hugely underused, because that's what allows someone who doesn't understand investing to know whether they care about this person having a different life or this outcome being achieved. So I think that's number two. And then number three is, you know, we do have a gap in standards in this area. And, you know, sitting in the asset management world, it's really hard to know how to accurately describe your products in a way that that really makes sense to people. And I do think we're getting to the stage where there has to be a common standard. There are multiple, but as soon as there are multiple and as soon as different people interpret them in different ways, it makes the planner's job almost impossible, and it certainly makes the end investor's job almost impossible. So I think a bit like risk ratings, the closer we can get to a common standard, actually the more chance we have of people clear and transparent, of people actually putting their money where they think they're putting their money. But in the meantime, stories and engagement, I think can get us quite a long way.
No, it's very, very true. It is very true. I think I completely agree with you on your risk rating as well. I think that still hasn't been cleaned up in our profession at all just yet. Yeah. There are people who are doing great work, don't get me wrong, there really are. And I'm looking forward to the day where we can finally say we've got a reliable solution. But even as soon as you mention the phrase spectrum of capital to people, I mean, it just goes straight over their heads, because it's a really interesting conversation to have. But as soon as you say those three words, the vocabulary is just completely off straight away, because that just sounds so dull.
Yeah, exactly. Exactly.
But what you're talking about is things that could literally and are literally changing the world.
Exactly. But what an opportunity for a planner, if you're a specialist in that, to have a conversation in a way that a customer understands, and then act as the interpreter to say, okay, well, this is where I think you should be invested. That is a huge opportunity, but you need a gigantic amount of skill to do that at the moment. The more common standards we've got, the more tools people have got, the more that can become something that everyone does, which is where we need to move to.
Yeah, absolutely. And just before we move off the topic of sustainability, who do you think that responsibility lies with to create that standard? Do you think it lies with firstly, it'll be a mixture of all, won't it, when I list these off? But is it the regulator? Is it us? Is it organizations like yourselves? Who does that responsibility lie with?
I mean, I think what you'd hope is that all of us in the industry do enough work and have enough ideas that the regulator is then able to look at them after a period of time and frankly pick the best bits and enforce it as a standard, which is the way the regulator tends to work. Rightly, it observes, and then it says, right, I've observed, this is what I think the answer is. And then that allows a bunch of innovation off the back of that common standard, because I think without that common standard, it's quite hard. If you're trying to build a tool, you're sort of always fearing the arrival of something saying, you've built this over here, well, we're going to throw that out because it doesn't meet this standard anymore. So it's a bit chicken and egg at the moment. So I think inevitably there's a regulator stroke treasury stroke government job to be done. Now, how detailed that common standard is, who knows? But I think there will come a point for that.
Yeah, it's great as well, because the people who are doing the work at the moment are not the regulator. The people who are doing the work are the people who are doing the work.
Exactly.
And that's how it always starts, at that grassroots kind of level, doesn't it? And so I think we're in the right place at the moment, to be fair. We might not have all the answers just yet, but we're doing the work and we're getting it. So yeah. And this whole topic of understanding investing and the world of money, it's a subset of the bigger topic, which is financial education and financial literacy levels in the UK. And it's actually just been in the news over the last week, hasn't it? I know that, again, anyone who's listening to this in the future, but for the last week, we've been talking about maths at school and how most people hated it, and most people, didn't learn about the things that they wanted to, and how most people leave school not knowing what a mortgage is, not knowing what a pension is, not knowing what investing means. And that does have, you could say life is the lesson that you get, and it teaches you along the way, and you have to make those mistakes to learn them. But that's a very kind of staid way of thinking about it. I always like to think of, imagine if you did learn this kind of stuff at school and you were proficient in it before you left school, what impact that would have on society, and how fewer money decisions people would make wrongly. But again, just your thoughts on this would be nice. And also, like, where do you think that responsibility lies? Like, financial education for the public, who do you think is responsible for that? Is it the government? Is it us? Is it, other organizations? Who do you think that lies with?
Yeah, it's a really it's a massive topic. Fundamentally, the responsibility for everything kind of lies with the person, right? So that was one thing I didn't include. To educate yourself. But I think the problem is that there aren't enough tools and resources available for people to do that in a way that works for them. So, if you really wanted to, you could sit of an evening, surf the web and teach yourself what compound interest was, but sort of why would you? And it'd be quite a tough thing to do from a zero base. I think some of the things I've learned about financial education is that people kind of need a bit of a safe space. So, I think there is a responsibility and an opportunity in schools to learn some of the initial concepts. So you understand that a pension compounds over time, that you understand that debt compounds over time as well. Those sort of concepts, it feels like a missed opportunity not to come out of school understanding those basic concepts, in my view. I think though, once you get beyond that into, you're earning your first paycheck, you're making your first big financial decision, what I've learned is that people struggle to do that with flat content alone. Actually, what they want is a conversation with someone to say, this is my situation, what do you think I should do? And they learn from that personalization rather than from knowing theoretically what a pension is and knowing theoretically what a mortgage is. So creating those opportunities for people to engage on their personal situation, I think, is the best path to getting people properly financially educated. I mean, it's why the financial planning industry works. So, we've got this phenomenal case study of why that works. The question is how you get the other 90%, that kind of support. That's the big gap, I think.
Yeah, absolutely. It kind of as well comes into the conversation that we were having earlier about this engaging thing of, getting people engaged in their personal finances, which is, something that is just not happening at the moment at all. But and as also what you were talking about, stories. So one of the most powerful ways to tell people, that you should be doing something or that you should know about something is to tell a story of when something went wrong or when something went really, really, really well. Like I always use the example of when I sit down with my friends, this is a really boring conversation that we have, but when I show them, how much your money could be worth if you invested it over 60, by the time you're 65, what it could be worth if you just stayed investing for the rest of your life at this certain level. And they're always blown away by it, but then the next day they go back to just doing the things they normally do. So it's more of a kind of habitual thing that I think we have to ingrain as well, isn't it? Yeah. And that's where the coaching element comes in, which is, again, something I want to talk to you about, which is the Money Coach, which you mentioned in when you started talking at the very start. You guys were sponsors at our conference last year, so we must say a big thank you to you for doing so. And it was really interesting actually to speak to the guys from Money Coach, and we had them on a few panels, and their perspectives on this kind of thing were really, really modern and fresh. So can you just tell, for anyone in the audience who doesn't know about Money Coach and what you're intending with this, can you just give us a bit of an overview of what Money Coach exists for and what you're trying to do?
Yeah, so Money Coach exists to try and solve that problem that we just defined, which is how do you get the 90% of people that don't currently use a financial planner personalized help to get them to a money plan. And we build it with the hypothesis that in order to break that apathy, in order to drive that engagement, you need a person and you need personalization. The other thing that is sort of harks back to your question of who's responsible, I kind of stand by is the individual, but I think there is a much bigger role that employers can play in financial education. Employers are generally trusted by their employees. They provide a safe space. They provide benefits that employees believe and should believe are provided in their best interest. So what Money Coach does is it provides financial coaching in the workplace. So it partners with employers and says, you can book a half-hour session with a coach on video and explain everything about your financial life, and they will help you build a money plan. So you can think of it, if you're a financial planner, you can think about it as a super simple kind of lifetime cash flow, but just helping you understand what might happen if you put a bit more money into your existing salary sacrifice pension plan, what might happen if you invested any ISA savings you've got in an investment, not a cash ISA. What it doesn't do is advise you on products in that session, but it gets you to a money plan, it gets you to a level of understanding. And some of the actions people tend to take at the end of a session are increasing their workplace pension contributions, which is probably one of the easiest things most people can do to secure their financial future. Also, an enormous amount of people leave a session and write a will. because over 60% of people in the UK do not have a will,
Yeah.
which, whatever age you are, is, I'd go so far as to say it's a slightly irresponsible state of affairs, because it creates such a nightmare for those people you care about that are dealing with that after your death. So that's another big action people take. But we're really proud of it, because I think it's solving a massive societal problem that we as an industry have been trying to solve for a while.
Yeah, and I love that, by the way, and I love that there's actually actions afterwards that people are taking, which proves that it works. Another thing that I think a lot of people have apathy towards is that what they're actually invested in. So again, it comes back to the previous conversations that we're having about sustainability and stuff. Most people don't know that you can actually, because they just get dumped into a workplace pension fund and they just think that that's the best one, and they think that, that's the one they should be in. And they don't know that you can actually tweak that investment to change to invest in something completely different. Like, you can invest for good, you can invest aligned to your risk level and things like that. Like, even just these simple things that we just don't know, the difference that can have over 20 years is huge.
That's exactly it. They often don't understand their workplace benefits either. And the fact that they might have life insurance that will pay out twice their salary, but that won't get anywhere close to paying off their mortgage. So maybe actually that's something they need to look at. They sort of know vaguely that a benefit might exist, but no one's ever taken the time to sit down and explain it. And the information's always on the intranet, but have you ever read it? I haven't.
No, we're a team of 6 at NextGen, so we don't have what you call an intranet, but I have seen those things before, and I've never ever engaged in one of them. So no, I get your point on that one. I think there's a conversation here as well about, again, I hate to bring the regulator into everything, because we're all bored of talking about the regulator all the time, aren't we? But this area of coaching and guidance and, that kind of, I don't want to call it financial planning light, but it's the kind of early stages of money planning and financial planning. I don't think it's really been dealt with by the regulator just yet. I think, it's not that they're not doing anything. It's not that they're not doing a good job, but it hasn't really been dealt with. So again, your perspectives on that, and maybe should the regulator get more involved in this kind of area to solve that problem?
Yeah, and I think a bit like what we're talking about with sustainable investing, I think what the regulator is doing is observing, and then will issue guidance. So it's come out and said, this is what we think, this is a consultation on simplified advice, which I think sort of sits between the two, and could be part of the answer here. I think I was really fortunate that when I was setting up the bank previously, we were in the very early days of Challenger Bank. So I got to spend a huge amount of time with both the FCA and the PRA, given you're regulated by both as a retail bank. Yeah. And I really learned something, certainly in a banking context, about how regulators think. So it's really easy to think, regulators are the big bad wolf who are trying to slap your wrist at all times. What I learned is the regulator is fundamentally, and particularly the FCA, is trying to deliver brilliant customer outcomes. And protect customers from situations that aren't in their best interest. So if you keep that in mind, that is what the regulator cares about, then I think there's a huge opportunity to set up business models, trial them, talk to the regulator very openly about them, and help the regulator understand what works and what doesn't work. Because if as we like to think at Octopus, you're only thinking about great customer outcomes, then I don't actually have anything to fear from the regulator. And I kind of believe that when they come to the point, which they will, of saying, right, we've kind of looked across this spectrum and we think it's time to issue some guidance on it, I kind of don't worry about that day. I think it'd probably be helpful, and we'll get more business models solving this problem, because, Money Coach can't do it alone. So I think we'll see that over the coming years. And I think we should see that over the coming years.
Yeah, it's true. And I think as well, like, if you think about it, on a big picture basis, this is why with things like consumer duty, for instance, which you mentioned there, the majority of people in our community are not worried about consumer duty. It's a pain in the bum because they've got some more paperwork to fill in and stuff like that, but they're not worried about it. They're just a bit aggrieved by the amount of hoops that they have to jump through. Yeah. But if we think about it again on a bigger picture, why it exists, like you said, it's to protect consumers. And as long as you are doing good work for consumers, you've got nothing to worry about. And, coaching and guidance is there to do exactly that. There are going to be bad examples, and there's going to be people who aren't doing a great job, but that's why the regulator exists, to weed those people out. So
Exactly.
no, that's great. Well, we've been chatting for nearly 40 minutes, and I know that you're a very busy person, so I'm going to start kind of closing things down a little bit. Probably one big final question, which is it's not evergreen at all. It's very tied to the situation that we're in the UK at the moment. So for anyone who's listening to this in 2 years' time, we are in the depths of the cost of living crisis here in the UK at the moment. And, people are worried about their finances, whether you've got loads or whether you've got none, you're worried about your finances at the moment. So I'm interested in your perspective on this. Like, do you think that it's now because there's lots of different ways of looking at it. Do you think it's a good time or a bad time, or just a time at all to be talking to people about their finances and trying to educate them on them when they're worried about them like they are at the moment?
Yeah, I think it is the best time I've seen, actually. So, some of the trends that we should all be worried about and that are completely understandable given the circumstances is people opting out of their pension plans right now and taking decisions that will really impact their long-term future. Those are perfectly logical decisions when you've got to get through to the end of the month. But there's an opportunity for people to understand the implications of those decisions and to take that decision consciously, rather than it simply being the easiest thing that you can knock off your monthly expenditure. So I think any time where there's an acute need, people should rush to financial planning. It should break that apathy that people feel in financial planning, because the danger at the moment is that people are taking decisions without fully understanding the implications. Not because people are stupid or uneducated, it's just that they're not financial planners. So how would they know? So at least taking those decisions consciously, and it might still be the right decision for your situation, but taking those decisions consciously is important, because there may come a time when you need to correct that decision, hopefully when we as a nation sort of pull ourselves out of the crisis we're in now.
Yeah, it's true. I think as well, like I'm kind of interested in, we spoke about this during the pandemic, about what kind of impact this is going to leave on generations of the future growing up when times are like this. So I was 13 when the 2008 banking, I'm just giving away my age there, I don't think anyone cares, but I was 13 when in 2008, and that no doubt has kind of it's guided my personality and it's guided my behavior around money. I think I'm certainly more cautious than other generations because I've seen what can happen when things go wrong. So again, it'd be really interesting to look at what this area that we're in at the moment has on future generations growing up around this kind of stuff.
Yeah, it'd be fascinating, because we may create a generation of budgeters because there are no other choices right now, or we may create a generation of people that when things hopefully start to get slightly less difficult, we create a nation of spenders. It's that old thing that apparently during recessions people buy more lipstick because they want a tiny luxury. I'm sure this is what you do, right? They want a tiny luxury because the big luxuries have to go out of the window. So it's really hard to predict how we'll behave, but you're right, it's going to kind of create an imprint on people's psyche for a long time to come, I'm sure.
No, that is true, yeah. And if you just look at my Amazon basket of previous orders, you'll see that you're exactly right as well. So
yeah, loads of lipstick.
Yeah. So the next week, well, there's 2 questions we ask everybody. So you're off the hook now. You don't have to answer any more difficult questions. You'd be glad to know. So the next one is a bit of a difficult question, but it's an optimistic one. So when we think of financial planning 10 years ago, it looks not completely different, but it looks very different to how it is today. And that's natural and that's good. That means we're innovating. But like in the next 10 years, what are you most excited to see in the world of finance and financial planning in the next 10 years?
Yeah, it might be a bit of a cop-out, but I'm kind of interested in innovation itself. So I have a huge belief in the power of entrepreneurs to improve lives. And I think if we have a vibrant, innovative ecosystem of entrepreneurs within financial planning within the next 10 years, then we will be solving bigger and bigger customer problems. I don't know what those problems are yet, but all I know is that to solve difficult ones like financial planning for the mass market, you need loads of people thinking about it. So a kind of culture of innovation, I think, would be the thing I'd most look forward to.
That's a great answer. It's not a cop out at all. And on the entrepreneurship thing as well, by the way, I thought that going into, I mean, our profession is a bit kind of echoey in an echo chamber, isn't it? Because our clients aren't really suffering at the moment as much as kind of the rest of the general public. But I've never seen as much entrepreneurship as what's happening right now. It's crazy the amount of people that are launching their own financial planning firms, launching, new businesses to deal with consumer problems and things like that. So I completely agree with you. Like, imagine if we can keep that going for the next 10 years, where we'll be as a profession. We might even overtake banking in all of the different things that they've got. How amazing would that be? But like, I think that the innovation has to deal with that big problem of the advice gap, I think, which is that, not enough people are getting financial planning at the moment. And if you solve that problem, it's like a compound effect of everything else it's a knock-on effect of everything else that you solve in society as well. Because everyone has money. So that's, if we can deal with that. We always like to also ask our guests for a book that has helped them in their career so far. I've widened this out recently because it is 2023. So there are other ways to consume nowadays other than books. So I'll let you have anything you want: podcast, film. Mine, for instance, is The Yes Man with Jim Carrey. Brilliant book. Changed my life. Sorry, brilliant film. What have you got for us? What do you recommend our audience consume?
So it's a great question, and I kind of, it's probably badly. I don't really read business books. I know you probably should. I just don't.
I don't either.
I did though read a book recently called Invisible Women. And I don't know whether you've heard of it, but it talks about how in the world of sort of data and product design and service design, most data is based on men. And most products and services are therefore designed for a man in mind. And, financial services are no different. When you say to an asset manager, who do you think of when you're thinking about designing a product? 85% of them will say a man. Yeah. So the brilliant thing about Invisible Women is you can read that book and you can get really annoyed and go, God, this is so flipping unfair. Why is the world designed for a man? Yeah. Or you can read it and go, oh my goodness, this is the most phenomenal opportunity, because we are really, really narrow in the way we think about customers. And a book like that, I love books that kind of give you a different perspective. A book like that gives you a completely different perspective and says there are all these customer groups. Women is just one of them. It's just so surprising because women are not a minority group that it can be so biased even for a group that's not a minority. But, there are so many groups of customers that if you were to design with them in mind, you'd come up with completely different solutions. So that perspective, I think if you're after something that changes your perspective, it's a great book to do that.
Yeah, absolutely. I think I think that might be the first time that it's been recommended on the podcast, but I know that it's definitely not the first time it's been recommended to me. So yeah, really, really good. I think I listened to the blink of that on Blinkist last year. Really, really, really good. It kind of reminded me of Lean In a little bit. It kind of reminded me of the stuff in there. I don't know if anyone in the audience has listened to that, but that's a great book as well. Brilliant. Well, we do have people in the audience who actually note down these book recommendations, so hopefully that has scratched your itch. But that's all we've got time for today. So we do like to give the last word to our guests to say a big thank you for coming on the show. So can you tell our audience where to find you, how to connect with you, and also leave us with any last notes as well?
Yeah, I would say LinkedIn's the best place. And if you've got brilliant ideas, if anything's inspired you that we've talked about, then get in touch.
Fantastic. Short and sweet. Amazing. So that was Ruth Handcock from Octopus Investments on the NextGen Planners podcast. If you enjoyed this podcast, you can share it on all social media channels. We are even on TikTok nowadays, but don't hold me to it. We're not as active as we should be. And you can listen to it on Apple Podcasts, Spotify, Google Podcasts, and our website, nextgenplanners.co.uk, where you'll find more information about all the amazing things that our community is up to, including our conference, which is coming up in June this year. It's going to be called Supernova 2023 in Manchester and virtual. It's going to be absolutely incredible. So go check that out. And of course, the other things that we do to help financial planners is all on there as well. And finally, I do just want to ask, as always, if you could just leave a rate and a review and also share it as well. That really does help us out to grow the podcast. But other than that, I think we're all good. So a big thank you to Ruth for coming on the show today. Thank you guys at home for listening, as always. And we'll see you in the next one. Bye-bye.